we at DC Fintech Week, we like to have some headliners, and certainly we have one right now, a big one, with Paolo Ardoino, the CEO of Tether, joining the conference. Paolo, are you there? You are
yes,
indeed
I'm there.
You're seen right now on a very large LED screen for Washington, D.C. So hello, and thanks for joining us.
Thank you for having me, Chris.
A pleasure. Certainly, Tether is interesting. I mean, like, when you talk about Tether, it is a stable coin, and I think it's good to sort of begin the journey a little bit into, I guess, what you can describe as the sort of bull case and the bear case that policymakers are debating when it comes to Tether. So let's start with the bull case first, and then to the bear case to sort of help set the stakes for Washington, D.C., since we have so many policymakers and others here in the building. And then maybe we can sort of frame the conversation for the larger sort of crypto conversation taking place tomorrow. Okay, so starting off, I guess, with the bull case. I mean, Tether, you guys are a dominant, very large stablecoin, and we actually just finished a conversation just now on financial inclusion. So again, starting with the bull case, maybe you can talk a bit about the role Tether plays in the economy, in the global economy, and the role that you would like to see it play in the future.
Sure. First of all, thank you also to the audience for being here and listening to me. So Tether started around 10 years ago. Actually, we just celebrated our 10 years anniversary with a very simple use case, with a very simple idea. Let's put together blockchain, that was that amazing technology created by Bitcoin, and let's put it together with the most used currency in the world, that is the US dollar. For the first few years, the use case of Tether was helping the cryptocurrency trading settlement. So very simple, limited use case. But especially during the pandemic and after the pandemic, and the change of different geopolitical situation, and especially macroeconomical situation in emerging markets and developing countries, USDT has become the lifeline for hundreds of millions of people around the world, especially in emerging markets. So one important statistic is that 3 billion people in the world don't have access to bank account or basic financial services. They are not bad people. They are simple people. They are just poor people, too poor of being of interest of banks, because they generate on a yearly basis too few commissions. But with stablecoins and USDT, we gave them, for the first time in their lives, the ability to have access to payments, to start creating their first savings account directly on the smartphone, instead of having to collect money and cash form under the pillow. As of recent statistics, we see how USDT have been growing over the last few years to 330 million users just on chain, plus several tens of millions of users that are using USDT through centralized exchanges. And another important statistic is that on a quarterly by quarterly basis, we are growing very fast. We are adding around 30 million new wallets per quarter. So the reason for that is actually because we are providing an easy service, a service that everyone can use. And again, think about the people that live in Argentina, think the people that live in Turkey, or in Brazil, or in high inflation countries. We said about 3 billion people that don't have access to basic financial services. 5 billion people are living in high inflation countries. Those people are honestly sick and tired to have only access to their national currencies. And so they are looking for an alternative. And historically, that alternative has been the US dollar. Right? But in Argentina, if you live in Argentina, access to the US dollar is very, very hard. It's harder and harder. And so people want to find a better way than trying to use the black market to access the US dollar cash. They want to use locally regulated exchanges to buy digital dollars using their pesos. So that is what Tether USDT is representing. It's like this digital dollar we are not we are not selling USDT in the US. We don't onboard US customers. Because in the US, you have so many different counterparties and players. You have people on average have multiple bank accounts or debit cards, credit cards, PayPal, Venmo, Cash App, you name it. You have tens of ways to pay, but put yourself in the shoes of someone that doesn't have anything apart from their national currency, and they were never able to build a savings account and a future for their children, and maybe send their children to study abroad because they were never be able to accrue enough money in a stable currency, in a safer currency that their national currency. So that is what USDT is representing today. It's and to us is the most important thing to defend.
Yeah, let me just sort of jump on that, because like some of those statistics are important, and obviously, I think when you think about Tether and the stance that people have, it really does depend, or it's informed a little bit as to where they are. I mean, you had mentioned the 30 million new accounts this quarter, but in the United States, and I think this is what you were sort of signaling towards. I mean, there's a tremendous importance of compliance, and U.S. regulators and law enforcement officials, they need to know that a payment is safe, whether or not for a large financial institution or for smaller actors, and to make sure that that instrument is not being used as a tool for criminality. Corporate transparency is a big issue. So is how the issuance of that instrument occurs, and especially in a global marketplace. So maybe starting with your AML and KYC, how does Tether make the case that it is not an instrument for evildoers?
That's a very good point, and I think this is a very timely, because look, stablecoins are very, very powerful, and actually they can give access very easily to payments to hundreds of millions of people, as we said. But not only for the government and for regulators and for law enforcement, the ecosystem safety is important. For Tether itself and for all our users, the ecosystem safety is important, right? So we don't want to have few bad apples actually creating problems to hundreds of millions of people that really need the product and this new payment system for their lives, right? For their families. So as a CEO of Tether, for me, KYC AML are very, very important. Compliance is very, very important. So in latest December, I became the CEO of Tether, and I wanted to reinforce that mission. That didn't start just last year, to be clear. Tether has always been a force of compliance, and I understand that publicly it never or didn't appear like that. At least in the US, right? I want to be open. I want to be transparent about that and about the issues. I think communication, transparency is truly important, and we are actually doubling down on that. So Tether, as also recently announced, works with more than 180 law enforcement agencies across more than 45 different countries. We onboarded the FBI. We onboarded US Secret Services to help them with their issuances. So when money is frozen, we can help them to get back the money and being able so that that money can be redistributed to the legitimate owners. There are not many financial institutions in the world that work with more than 180 law enforcement agencies. Again, we work with the Department of Justice of the United States. We have named and thanked for our help by the Department of Justice. Same thing with the FBI. We work with the Europol. We do sessions of education with Europol. And that goes all around the world. We froze hundreds of millions of dollars on behalf of the US. We are working with the US to get this dollar back in case of, for example, hacks or pickbacking. We are working so that this money can return back to their legitimate owners. We have developed over the last 10 years incredible tools ourselves, because remember, blockchains are transparent. The beauty of blockchain technology is that everything will remain on chain. Nothing can be deleted. So whenever people will look at, and law enforcement will look at blockchain, information stays there. And so this is actually quite helpful to do compliance at a much better and higher scale than any bank. Imagine if you're a law enforcement agency, you have to trace a wire across multiple jurisdictions. You have to go through multiple hops and try to get courts in different jurisdictions to try to unveil the traces of that wire. with blockchain is public. That's why we working also with partners like TR Labs and especially Chainalysis. We have adopted the Chainalysis ecosystem monitoring tool that help us to be very surgical in the approach that we have in freezing funds. And not only we are waiting for law enforcement to tell us what to freeze and when to freeze it. Of course, as I said, the work with law enforcement is very important, but we are very, very proactive. So we start ourselves. We have an internal investigation team on top of the compliance onboarding team that are great. We have an internal investigation team that takes care of starting proactive investigations and monitoring.
Paul, I just want to jump in because I just want to make sure that your microphone is. We can hear you. It just sort of fluctuates a little bit. And I want to give both you and the AV team a moment just to make sure that everything is working okay. But just to sort of carry on in that conversation, I mean, AMLKYC is one issue. Obviously, there are lots of different kinds of regulators. There are lots of different kinds of concerns when it comes to the integrity of payments. Another is obviously the reserves, the quality of reserves. The CFTC had fined Tether at one point in time. What can you tell us about the content of the reserves backing Tether and the transparency and auditability and the like for a Washington DC based audience?
So also that's a very important point for us. So and I hope my
it sounds great now. Yeah.
Okay, great. So risk management is very important. So over the last years, we have demonstrated the solidity of Tether, right? Openly in 2022, there was a lot of noise, especially in the entire cryptocurrency industry. Everyone remembers FTX and many others, Terra Luna, and the Tether was subject to enormous pressure. I think such pressure was quite unique to us, and it's a type of pressure that almost no bank was able to survive. In May 2022, Tether was subject to $7 billion of redemption over 48 hours. That was more than 10% of our reserves. And we were subject within 25 days to $20 billion of redemptions. That was 25% of our total market cap. So think about the standard banking industry where they can lend out, they do fractional reserve. Tether is over-collateralized, is 104% collateralized. Standard banking can lend out up to 90% of their reserves and keep 10% in their balance sheet. That is the exact problem that happened with Silicon Valley Bank, Silvergate and Signature. Last year in 2023, one of our major competitors almost died because they have uninsured cash deposits in the Silicon Valley Bank, and that almost killed them. While Tether has more than in this moment, actually very, around $100 billion in US Treasury bills. If we are not a country, of course, but if we were a country, we were the 18th country in terms of how many USD bills we own. So, and that, of course, short-term USD bills, less than 90 days, because we want to make sure that at any point in time, we can redeem those assets and we can pay back any redemption with the deepest liquidity possible. So it's not any more hypothetical. We were subject to this type of pressure that, again, no bank in the world, even Washington Mutual in 2008, this year, New York Community Bank, all these banks failed because they didn't have proper risk management. And I think it's very important to showcase what Tether did and with the stress test that we had, again, not hypothetical, to demonstrate that our reserves are very, very solid. The problem is in keeping cash in a bank is that if the bank goes bankrupt, the cash will be part of the bankruptcy process. If we keep T-bills in a very safe custodian, but even if there are problems with the custodian, the T-bills are securities, they will be brought back to the legitimate owner. So that's what we did and what we do, and we have a great investment team to ensure that every single action, every single investment, every single detail, also macroeconomic detail, is taken into account to ensure that the 350 million users that are using USDT as a lifeline are actually safe in using our product.
Yeah, I think that one of the challenges is obviously to sort of figure out, well, what does the mechanism look like and how does it evolve over time? But one thing is for sure that you've noted, and I think it's one of those under-discussed questions, sort of let's call it the geoeconomics sort of question, is that there is a there are T-bills that are backing Tether to a degree, and certainly I've heard sort of anecdotally that there are a lot of them. I think that many people here in Washington D.C. would be surprised. I've heard again anecdotally that there are actually more T-bills held by Tether than Germany. I don't know if that's entirely correct or not, but it gives a sense of the scale of Tether. What does that even mean for Tether to hold those kinds of reserves, and what does it mean in terms of the stakes for the U.S. government?
So we are very close to Germany. So we have more T-bills compared to UAE, compared to Australia and Spain. So we believe that U.S. Treasuries are the safest assets that a company could hold in the balance sheet, right? So especially the short-term ones. I remember, again, the most important job of a stablecoin issuer is being able to liquidate the reserves and pay back everyone and pay every single redemption in a timely fashion. So that's why, given the rapid increase of Tether, in 4 years we went from $15 billion to 120 as of today. We have to use the best asset that we could have. Now, what does it mean for the U.S.? I think it's a great question, right? If I think about the macroeconomic aspect of what is happening in the world, I remember China had around 3 billion or 2 trillion in U.S. Treasuries holdings up to 2 or 3 years ago. And if you look at today, they have around 800 billion. And in that scenario, there is a kind of a single decision maker that decides to divest from U.S. Treasuries in a short period of time. In fact, 2 trillion to 800 billion in just a few years. One of the things that the features that not many realize about USDT and Tether is that think about every person that buys USDT in Argentina, in Turkey, in many countries, in Brazil and so on. For every time we get the money, we purchase a piece of the US debt. So now the decision to sell that piece of US debt is not anymore in the hands of a single person. So we will sell that piece of the US debt to repay a person that needs to cash out. So thinking that to the fact that we have around 350 million users and even more actually. So we have decentralized the decision making of selling the US debt. So you will not find yourself in a situation where the US debt can be sold at once, but it's hundreds of millions of people that will not decide, of course, all at a single time to sell that chunk of US debt. So I think that it's very important for the US to start finding new buyers. And not only we are finding hundreds of millions of new buyers of US debt, just because through us, we can expose these emerging markets to the best currency in the world. And in that process, we are purchasing immense quantities of US debt.
Yeah, it is quite an interesting sort of geopolitical question. I'm sure here people are going to sort of grapple through. Well, on the one hand, you're sort of exporting U.S. power to the extent to which you're relying on or purchasing the U.S. dollar. But then the question is to make sure when you decentralize that access, that indeed like that any catalyst to redemptions is sort of avoided, so that they can make certain kinds of predictions. Which gets to this question about, again, I guess to move a little bit more towards the in-between case. You started off talking about how many people had, from around the world used Tether. Clearly, there's some skepticism here, evolving. We'll see where and how that goes. But certainly, Tether is viewed pretty differently in different parts of the world. And I would guess Asia and LATAM maybe being the two areas. Why do you, getting back to your sort of bull case here, is there a value proposition that you're delivering that is an unmet need as opposed to, say, here again in the U.S.? You'd gotten there a little bit, but I wanted to circle back to that.
Well, yes, I think the most important part is that when you create a technology, you have to think about not your personal needs only, right? Whenever you create a product, you have to think about who is the best user of that product, that technology. So in the US, you are, of course, every country has a problem, but in the US, you are having, US is the most powerful country in the world. And so every other country, almost every other country is downhill from that. So you have to try to go outside the US and ask to every single person you meet, would you prefer to hold your national currency or would you prefer to hold the US dollar? Every one of them will tell you, I prefer to hold the US dollar, right? So whenever you create a product, you have to think about the product market fit, right? So why a company like Tether should compete in the US when you have already the best dollar rails, you have the best banking, you have the ton of payments apps. It's 25 years or more that you are building payment rails. And then on the other side, you have 5 billion people that don't have that luck. They don't have that access. When we think about financial inclusion, I think that is very, very important to also, financial inclusion shouldn't be a marketing pitch, right? Financial inclusion should be done properly. And I think that USDT and Tether are actually doing much more than almost any other company in the world to achieve that. Because think about the remittances case. We see remittances companies that until USDT didn't have any match, they didn't have any competition, they could charge from 10 to 26% to move money across two countries. If you think about the case of Philippines has, on a yearly basis, they receive $33 billion in remittances, right? And 10% is 30 billion. It's a lot of money. And, that money should stay in the pockets of people that work really hard, far from their families, and they want that money to stay in the pockets of their families. So with USDT, you can actually completely almost reduce to zero the cost of transaction cross borders. So these are the things that Tether is doing very, very well.
I just want to jump in because, again, I'm trying to hopscotch a little bit around the world so that we can, get a full picture here in Washington. When you move then and compare that picture to, say, the EU, where, you saw recently the news of the EU delisting stablecoins for failure to comply with MiCA, which is the EU regulatory regime. Tether was at least implicitly sort of cited as a likely impacted stablecoin. I mean, is it then that the EU is not a high priority? Or maybe you can talk a little bit about that situation and what's happening.
Later. So first of all, the EU is a little bit like the US. So the EU is still coalition of fairly rich countries. So the percentage of unbanked is very, very tiny, right? Again, there are countries where the percentage is 90%. The EU might be around 5%. So you have to pick your own battles. But, I think that I've been quite vocal on the EU MiCA regulation because, I am very in favor, and we as a company are very in favor of regulations, but regulation should help defend the customer. The issue with the MiCA regulation is this one. If you are a big stablecoin like USDT, you are required to keep 60% of your reserves in cash deposit. Cash deposits in Europe are insured up to 100,000 euros. In the US, I think that they are insured up to $250,000. Imagine that you are a stablecoin and you have 10 billion of euros of market cap. Then 60%, so I mean 6 billion euros, have to be kept in an insured cash deposit in European banks. Now, banks can lend out up to 90% of that 6 billion euros. So it means that 5.4 billion euros can be lent out to people that want to start a company, buy a house, buy a car, and so on. 600 million euros will be kept in the bank. Now, imagine someone wants to have a redemption 2 billion euros. They come to the stablecoin issuer, they ask for 2 billion, and the stablecoin issuer goes to the bank, and the bank has only 600 million. The bank goes bankrupt because the bank cannot meet the redemption, and the stablecoin issuer goes bankrupt. So when it comes to regulations that are actually improving the safety of the end user, I'm all in favor. I think that stablecoin issuer, as we are doing with USDT, I should be able to purchase the government debt. I want for USDT to purchase billions of US debt. And unfortunately, with the MiCA license, I cannot do that. And I don't want to put my 350 million users across the globe in danger because the MiCA regulation does not take into account the systemic risk that very same regulation could potentially create to the European banking system.
Well, you've already, I guess, sort of read my line. We only have, we're already out of time, but I will give you maybe a 30-second sort of wish list. I mean, if you were, we're in a political season. I don't know if you've noticed. There are some elections happening in the world. Is there anything then, given the way sort of Tether is evolving, is there anything then in the U.S. with regards to U.S. regulation that you would like to see? I mean, you've already mentioned what potentially you'd like to see over in the EU. What's your perspective on the U.S.?
Well, I can tell you, look, there is no place like the U.S., right? So we tried to create multiple stable coins in different flavors, different currencies, but the reality is that the entire world is looking at the U.S. Look, I'm Italian, and actually today I was born in the 80s. So today I'm 40 years old, actually. It's my birthday, so it's a pleasure to be with you guys. And
nothing says your birthday over at DC Fintech Week. Great. Yeah.
Yes. And look, I mean, being born in the 80s and 90s, I watched the US being the prominent tech leader, right? You were always watching the movies, and the US has always been leading the technological development in every single field. And I think that, growing up, this is the first time in history that I see the US dropping the ball. And I think that whomever will win the elections, I think it's very, very important that crypto regulations, sensible crypto regulations, and stablecoin regulations will come to fruition in a way that will protect the end users, but also will help this incredible technology to foster and to become very, very much the lifeline for hundreds of millions of people that don't have the same luck and the same opportunities of people living in the US and Europe. So that is what that is my wish list for whoever will win the election. The US has, has huge importance in this dialogue. Every single regulator in the world will look in the US for the right regulation. So I hope that will come anytime soon.
Well, thank you so very, very much for your time and spending your birthday with us. Thanks for your time. And to everyone, let's give a hand. And also, we are now heading to our lunch break downstairs, so enjoy, and we'll start things back up in an hour. Thank you.